Hello, everyone. It's Noelle with Verivest, and today with me I have Jack Martin and Nate Pattee from 5210. Good morning, guys. How's it going?
Good morning. Well, it's great.
Good morning.
You guys look like you're on a vacation, but let's just
Over here.
jump right into the questions. Both of you guys, tell us your origin story, how you got to where you are today, and a little bit about the beginnings of your company.
Yeah, I'll go first. It's probably appropriate that both of us answer this one, so I'll go first. And we'll try to keep our backgrounds brief, and let's focus on like why we started 5210 in the first place. So a little bit about me. I'm originally a Minnesota boy. I grew up in an enormous family. Graduated high school in Seattle, so not too far away from where you're at there. Spent a tour in the military, and then I chose Arizona, where the sun shines every day, to launch my real estate career. So my career over the last 25 years, general contracting, development, single family development, did about 2,000 single family homes on the acquisition and sales side, repositioning of multifamily assets, and then I found my true love of mobile home parks, which kind of brings us to where we are today. So, and then I'll touch a little bit on our genesis or our origin story, and then I can hand that off to Nate. When Nate and I got together to architect this business, what we really wanted to create was a recession-proof strategy. So when we look back to the last recession, which was the Great Recession of 2008, we remember how devastated people were, how both emotionally and financially. Like, we all know people who, and you probably do too, Noelle, everybody knows somebody who lost their job, people who lost their homes, but we all know people who lost their investments. And some people lost all of their investments. And that's a gigantic problem for investors. So the problem really is all the time that it takes you to build up this nest egg that you can go invest, it's just hard to get that time back. So but what's interesting is that same problem that existed in 2008, it still exists today. I mean, think about it. And regardless of the investment that you choose, you're still subject to market cycles. So it's something that you can't control. So when Nate and I sat down, we're saying, how can we develop a different kind of investment strategy that will still perform during a recession or a market crash or some event like that? And we don't have to worry about losing capital. So that is that gigantic problem, and it's that kind of investment riddle that we sat down to solve. And that riddle really is like, how can you create predictable returns and avoid risk of loss regardless of what the market brings us? So that was the genesis, and that was what we sat down to create. And I'm going to hand it off to Nate and let him share his story.
Yep. Thanks, Jack. I'll touch on a couple of the goals. When we sat down to create 5210, what were the goals and what were we really trying to get to? What was the end result? But let me share a couple of things about me. So I grew up in Indiana, Midwestern boy, swapping out hot water heaters in my parents' apartment portfolio when I was 10 years old in between basketball practices. Then, from there, Purdue University, construction management degree, project manager with a big construction company out here in Phoenix. That was close to 20 years now ago. Commercial real estate brokerage with a large national real estate firm, followed by asset management with apartment investments. And that's when Jack and I met. And then, lastly, we landed on 5210. We've been off to the races since. So the goals of 5210, when we sat down and said, what do we got to create? Number one, we had to have the right real estate. So what was going to create this recession-resistant strategy that was going to get us through, and get our investments and get our investors through and get us through any kind of market, downturn, regardless if it was going well or if we were in total chaos like 2008, what were we going to do to get us through? The right real estate was number one, followed by the business surrounding it. So, in my opinion, it's rare to find a class of real estate, and I've seen all of them over the last 20 years, just like Jack has. So it's really rare to find a type of real estate that can really deliver that predictable result through no matter what was going on. But it really does exist. In our experience, we did a whole bunch of research when we landed on this business and said, what was it going to be? What was that asset class going to be that supported our backgrounds and everything that we've done? And we landed on mobile home parks. The second thing, the business surrounding it. We knew that we had to build a business around it that was world-class. What we recognized and what we found in all of our experience being around operators and businesses in general, that there's guys are really good at real estate. Most guys are really good at real estate, but they fall down or they're not quite as good at all the other stuff that what we really learned was important to our investors. So no matter what we had to do, we had to say, hey, look, here's what we're going to do. We're going to build the real estate and we're going to be good at the real estate. But then we had to architect this business that supported all that other stuff that our investors wanted. Stuff like never missing scheduled reporting, always hitting distributions on time and delivering that return every single time, delivering tax documents on time, over communication. So communication for us with transparency is critical. It's easy to report when things are going well, and we do that. But we love to report if there's hiccups or challenges. We say, hey, look, guys, we recognize that we've got a problem. Here's what we're going to do. Here's what we're going to solve it. And we're going to communicate that all along the way so people aren't in the dark. And we learned that was really, really important. One other thing that we learned was critical. We actually heard this from a couple of our investors, and they said, look, guys, this is going to sound weird, but we put you guys in this weird camp where we just know that you're going to do the right thing when nobody's looking. So we've kind of used that mantra and grabbed onto it. And our entire business is around crushing it on the real estate side, but also building and executing on all this other stuff that investors really want. It's a total holistic approach. And that's what we've done here.
I love that. Thank you, guys. Tell me next about how you guys source your deal flow and your acquisition strategy.
So I'll grab that one, Noelle. This business, so first of all, my role in the business is bringing the right deals to the company that are going to make sense, and then bringing the right capital partners that are aligned with what we're doing here. And then Nate's side of the business, I get the easy part, right? So I hand it off to Nate, and then his job is to underwrite it and make sure that it fits what we're trying to accomplish, and then be responsible for all the operational side and ensure the performance of all of our properties. So just so that what our roles are here. Mm-hmm. But since I'm on the deal flow side, one of the things I think is important to share is that mobile home parks aren't a big secret no more. Mm-hmm. So it used to be, and this is, if you go back 10 years, that was a mom and pop business, and it was kind of like it had a bad stereotype, and people, even myself, like I had that stereotype, when I looked at mobile home parks, right? But today they've become the darling of real estate. So not only are there, new folks like us or younger guys trying to get into the business, but there's also some of the largest institutional equity firms in the country are buying parks at an incredible pace. And it's because of the recession-resistant nature. So knowing that there's that competitive landscape, it's really, really important that we have control of our own deal flow. So our core strategy is by nurturing relationships, but there's really two separate buckets that we look at acquisition or our pipeline. And one of them is more traditional, build relationships with brokers, get on their lists, find all the private listing sites where parks will, so that we're seeing all of the potential assets that come to market, right? So, but the truth is that most of those parks aren't going to fit us. So now there are still occasions where that pipeline will still bring leads, like a property's been on the market forever and the seller has a shift in motivation that potentially could become a deal. And then, sometimes there's pocket listings. So you get brokers that you build relationships with, and they're like, hey, Jack, this guy wants to sell, but he just doesn't want to list it. So that could become an opportunity there too. But the part of the business that we really like, or the part of the acquisition pipeline that we really like, are off-market deals. And we found that there's two ways that work really well for us that allow us access to off-market deals. One of them is by building a network of referral partners. And this is constantly growing, but it includes like other owners. Nate's on the board at the MHCA, so he knows all the owners there. So park associations and that kind of thing. But also like title companies and lenders and people that are just active in the business. But there's a really interesting one that we found, and it's contractors. So there's a certain type of contractor that focuses, or they built their business around servicing mobile home parks. So by nurturing relationships with those guys, often they'll get wind of, the owner wants to sell way before it ever comes to market. And so that could be a lead there. But the one that we spend the most time on, and this is where we acquire most of our portfolio, is through what we call direct to owner. So we've built a whole database of every park in the state of Arizona that we'd like to acquire. And then I spend an inordinate amount of time, calling them, getting a hold of them, getting to know them and letting them get to know me, and then building and nurturing that relationship. So when it's time for them to consider selling, we're already in front of them. Yeah. And I'll tell you just a quick story, Noelle. And this is pretty classic. So I called 10 different numbers. I don't even know the right number for this guy, right? So owner of a park in Yuma that we really wanted to buy. I called him every week for probably 5-6 months. And then finally one day he answers the phone and he's like, Jack, you keep calling me and filling up my voicemail machine. And this is an old guy. He's in his 90s, right? So he's got the real, the little tape in the answering machine, right? He's like, I'm not selling, Jack. It's not for sale. But that when he opened the door, that allowed us to have this owner to owner conversation and get beyond, okay, I know it's not for sale, but tell me about your background. And we start to trade our park ownership stories, right? Well, fast forward, I still call him every month or on a regular basis, right? And we start to develop a relationship that's separate of real estate. And then eventually I went out to California. Nate and I went together and we sat down, had lunch with him. And we brought an offer with us. So we slide it across the table and he kind of chuckles. He's like, guys, this is not for sale. I really like you guys, but it's not for sale, right? So we're like, yeah, we know, but we just want you to have that. So if something changes, at least we got a place to start from, right? Well, then fast forward 6 months, and then one of our phone calls, he's like, hey, Jack, you know that offer that you guys gave me? I said, yeah. He said, do you mind if I make a change to the price and send it back to you? I was like, yeah, sure. And that's kind of a traditional story or a typical story of how that works, right? It takes a lot of time. It's a ton of work, requires a ridiculous amount of patience, but that has proven to yield the most results. And so that's where we'll get most of our parks from.
And what's awesome, and Noelle, what's really cool about that is, he calls us back and we didn't have to compete for that deal. He liked us. He said, look, if you guys can meet this number, you guys can have the deal. And we loved it. And we're totally off to the races, but it was because of that relationship and because he loved Jack and I when we went out there, that relationship was where it was at. And that's how we buy most of our deals.
I love it. So did it work out?
Oh, yeah. Yeah, we ended up buying that park. Yeah.
Great. Yeah. You left me hanging there for a second.
No, we bought.
That's awesome. I love that. Okay, I know you guys are in Arizona. This is in California. What key markets do you guys operate in and why?
Yeah, so I'll take this one too. Currently, we are just here in Arizona. We've identified 13 markets in Arizona that we really like. So for us, the key metrics that we like to see in a market, there's a whole bunch more than this, but I'll just mention the main ones. Is the existing population where we'd like it to be? Is the population growing or is it shrinking? So obviously, if it's shrinking, we don't want to be there, right? What are the employment centers? Are they diverse or is it just one employment? And is there job growth? So is the job growth growing or is the job growth shrinking? And then what are home prices and how do those compare with mobile home parks? And ultimately, it comes down to what's the demand for affordable housing in that market. So there's a couple other metrics like the size of the park, for example. What we've discovered is that there's a minimum size park that will accommodate a really good world-class on-site staff. So if the park's not big enough, it just flat out won't work, right? And right now we're focusing on just Arizona and we'll continue to do that while we still feel that there's adequate opportunity to continue with that focus. But we built our business and all of our processes and all of our systems. So it doesn't really matter if the park is right next door to our office or if it's 3 hours away or 3 states away. So everything that we've built would translate seamlessly when we select to move to another state, should that occur.
Okay. Awesome. What is your guys' investment philosophy and how do you determine whether a deal is for you?
Yep, I'll take this one. So philosophy, I feel like I can boil the philosophy down into a couple key words: focused, disciplined, conservative. Let me touch on each one of those and how they kind of work with us. So we're not the shiny object guys that are going to stray away from the strategy because of something that comes along that's got an attractive yield or it's just the new thing. We're not in a hurry to buy deals. I think that's really important. I think we see operators get into that spot, and it's a hard spot for them to be in, and investors. We recognize that the deals that we buy are foundational for our company. They're foundational for the fund. They're foundational for our investors. And, we just don't want to spend time on properties that, aren't going to get us to where we want to go. So we're going to remain super patient and super focused on exactly where we're after. And I'll touch on conservative here in a little bit, but let me touch on determining kind of if a deal is a deal. There's some basics that are just, they have to be there regardless, and it's got to fit our strategy. So it's got to be recession resistant, which is mobile home parks. And I'll say RV parks because there's some things there that make them very similar if you have the right one. But you're not going to catch us out buying, office buildings or retail buildings or something like that, because it's just not a good fit. Another basic is it's got to fit in the target market, like Jack talked about, and it's got to fit on the target return. So it's got to fit within our overall strategy from a threshold perspective on where we're promising investors our returns are going to be. Beyond that, some of those basics, the deals have to have a certain amount of add value. And it's not just a standard, market appreciation add value. There's got to be some stuff there that we can force to really push that bottom line NOI. Physical improvements to the property, operational upsides, and we're going to hit all kinds of different areas, and we're going to find those deals that allow us to really push the NOI when we're all done with the deal. The other component there, let me touch on the conservative underwriting for the thresholds of our returns. The conservative part's really important there. It's something that I hold near and dear to my heart just because I saw in 2008 how operators were just pushing their underwriting and creating unrealistic expectations on where deals could go. And it got a lot of people in a lot of trouble. So I leave myself a lot of room in our underwriting to make sure that that doesn't happen. Let me share with you kind of why that matters and how I do it. Anybody who buys real estate, they know that if they buy the deal, they put a plan together, they push into the ownership, and then stuff goes wrong. There's hiccups, there's unknowns, like things are going to happen that people just aren't aware of. Market gives them changes, unknown things that pop up that they weren't able to identify during due diligence, but they happen. So to me, you have to leave yourself room in your underwriting to absorb those surprises, and you can't get behind. It's really tough when you get behind. It's a challenge because then you feel like it's a grind catching up, and that deal can create challenges, and it can take a long time to get there. So when I do my underwriting, I leave room. There's surprises for myself to find along the way. I use conservative rent raises, conservative management and construction costs, conservative repairs and maintenance costs, conservative vacancy rates, conservative. On every deal, we promise that when we take it to our investors or we say, hey, look, guys, we're going to put this into our fund. This is a good deal. This is a deal that's going to fit really well into the fund. You should invest in it, and we're going to invest alongside you. We're not going to let you down. It's a promise that I take really personally, and I'm the one that oversees all of our properties, and I oversee the property. I oversee things from that handoff between Jack and I when it's like, hey, Nate, okay, you got it. You're going to do the underwriting. We're going to execute. You're going to oversee the plan. And my job really at the end of the day is on my shoulders and the rest of my team to follow through on that promise. And I've got to be held accountable. So here's something really cool that Jack and I do just to kind of talk a little bit about that accountability. It's really about us making sure that we're staying on track with one another and what our roles are in the company. So every week we have a weekly meeting where we talk about the same stuff. One of those things that we report on and talk about is what's called a scorecard. So a scorecard, this is kind of weird, but bear with me. We have a scorecard number, and I have a scorecard number, and it's something that I report on the performance of our portfolio. My number is 100. So what does that represent? That number is 100, but it represents 100%. So every month I say, hey, Jack, we're operating at X percent. And that number, as long as it's 100 or more, means that as of that month, we're performing at or greater than where I had projected us to be at that point in time when we originally bought the deal. So it's a great checkpoint for him and for me. And I share that number with our entire team, all the way down with everybody on at properties, our accountant, our property managers. Everybody knows where we're at, so that I'm held accountable and we're all pushing toward what's really important. So I'm happy to report my number since we started. The business hasn't dipped below 100. And and that number today is way bigger than 100. And that delta keeps getting bigger as we continue to move forward in the business.
That's great. I love it. Okay, tell me a little bit about how you guys generate value after you've made your investment and, getting a return on capital and risk mitigation.
I get that one too. Okay, so there's foundationally every park operator, real estate operator should be doing some kind of core focus things. Income, raising rents to market, filling vacancies, controlling bad debt. On the expense side, we're negotiating the heck out of contracts, controlling management, purchases, lowering utility costs, implementing capital improvements, taking care of bad tenants, bringing in good ones to replace them. There's probably 24 ways that we attack a property to really manage and improve bottom line NOI. We do all those things. But to me, those are kind of foundational. Those are things that have to be done if you're going to improve a property. We've gotten very good at all those things over the couple decades that Jack and I have. But we've got this cool secret weapon. So let me share our secret weapon. It's called traction. So what is traction? So I'll steal this. We stole it from, and we use it from a guy. His name is Gino Wickman. It's an entrepreneur's operating system that outlines really this amazing way to keep a hold of your business and make sure that you're always getting traction in it. So we run our business on it 5210. But what I said was there's no reason why we shouldn't implement this down at every single property. So we did. So what's the premise of traction? It's really getting everybody rowing in the same direction, putting right people in the right seats, creating tremendous accountability with every single person. And it's just a relentless pursuit of a single goal and a single vision going in like the same direction. So in detail, I'll touch on a couple things that makes it super cool. At the property level, we set 5-year, 3-year, 1-year goals, and we call them rocks because they're really immovable at every one of these properties. We break them down into quarterly measurables, and every single person on the team is accountable for getting us all toward those 5, 3, 1-year quarterly rocks. We've got weekly calls with the entire team to make sure that every single person's tackling to-dos, getting their rocks are on track, their issues are getting solved, and we're staying out in front of any potential hurdle before it becomes a problem. So that allows us to knock down problems before it gets there. It allows us to identify issues before they become problems, and it allows us to keep track and monitor income and expenses before it allows us to get outside of where we need to be. It's an operational philosophy that we live and die by here at 5210, and it moves the needle faster than anything you could ever imagine. So the last couple points here is that it's proven to help us generate value faster. It's proven in distributing a return to our investors' capital, and it's proven to drive value faster, which ensures that return of capital that you were talking about.
Hey, Nate, let me jump in and add one more thing here. So that whole process of traction, and it's kind of the architecture, the business architecture is really what it is. Inside of that, because I want to talk about a number, it's really interesting. We also have our core values here at the company. And there's 4 of them, and we live and die by them. So these are also kind of like rocks; they're immovable. And one of those is what we call delivering the best experience. So Nate and I, it's our job to deliver the best experience to our employees, to make sure that everybody's got the same vision. We're supplying them with all the best support and resources available, and making sure that it's just an incredible place to work. So we're delivering a best experience from the employer to the employee. And then our employees turn that and they deliver that same best experience to the tenants, right? So think in terms of, if you have a disgruntled employee and they're not happy working there, I mean, what's the chances of them doing that, right? So it's really interesting. And one of the numbers that everyone on our team has is, how did you deliver best experience this week, right? So that's part of our weekly meeting. We have to, you focus on it all the time. And then it translates, from us to our investors too. So it's really interesting that, Nate mentioned this early in the architecture of this business, that it's one thing to have a cool strategy or a recession resistant strategy that really makes a lot of sense and buy really good deals. But it's another whole conversation to deliver all those other things that they're not necessarily part of the return, but they really are. Like, it's the emotional return that you get, right? So delivering all of your reports on time and making sure that investors can file their taxes on time and all that stuff, that it seems like it's simple stuff, but if you don't architect for it, you really can't deliver best experience. So in Traction, the way that we do it, or the way that process works, or that whole architecture works, allows us to do that in every facet of our business.
Love it. That's great. Okay, tell me a little more about who the key players are in your guys' company that allow you to execute your acquisition strategy the way you do.
Yeah, I'll take this. I think both of us should probably respond here a little bit, but Noel, this might sound kind of cliche. The key players, I know it's Nate and I are the key players, but it really goes all the way down to the internet provider at our parks, right? So another one of our core values, people will hear me talk about these, is world-class team. And what world-class means is, we're not going to hire our brother because he's an accountant if he doesn't have experience in what we're doing, right? So our accountant that we chose, he specializes in real estate syndicators and working with companies that do exactly what we do. Our fund attorney, our internal property management staff, and Nate's bookkeeper, and it even includes our software. I mean, think about everything that we do, but it also includes you guys, Noel. We spent 9 months looking for this solution that you guys provide before we found Verivest, and we knew right away when we found you guys, this is the piece that we're going to add because you're world class. Mm-hmm. You got anything to add there, Nate?
Just to kind of bring it all together, we talked a lot today about how we set up our business, but everything we do really allows us to set up the best experience for our investors. If you asked our investors, and we have before, what do you guys really like about us? They'll rattle off a whole bunch of stuff that they really like. And it's interesting that we found one of the last things is yield. So we all know yield is important, but if we can deliver the yield based on this risk that we're providing and all this other stuff that we talked about today, it's just a gigantic win. And that's what we've been able to accomplish. And those investors are the rest of the team that are really important to us.
Awesome, guys. It was so nice to chat with you guys and learn about 5210 and learn about your guys' enthusiasm about your company. It's been great. Thank you guys so much for joining me, and I hope you guys have a good rest of your day.